Hi, Barry Mendel with Mendel Money Management. I want to discuss our view for 2026. I'll start off with the punchline by saying that I think 2026 is going to be another reasonably good year for the stock market, for asset investing. I'll give you the reasons why I think that. Right now, employment is weak, and the Fed PMI for manufacturing is weak, which indicates that there's a reasonable possibility the Fed's going to cut rates at some point in 2026. President Trump also wants to lower interest rates, and he supplied Fannie Mae and Freddie Mac with $200 million of funding, so mortgage rates are now below 6% for a 30-year, which is the lowest they've been in 3 years, which should help housing. Lower interest rates will also help the auto business. We also had that big, beautiful bill that was passed this spring, and that's going to cut taxes across the board, and so that should help consumer spending in 2026. Low interest rates historically have been good for stocks. You might want to know about the Venezuela impact. Most of it has to do with oil. Long term, it's going to be a depressant on oil prices, which is a positive, but in the short run, I don't think there's going to be much impact. The risks to a good stock performance next year are geopolitical. We are going to get a new Fed chairman sometime in the next couple of months, and hopefully he'll be independent. The other risk might be artificial intelligence spending. We expect it to be strong, but if it disappoints, that could hurt the stock market. So the bottom line is we're bullish on stocks, and we're expecting the rally to broaden away from just being on the artificial intelligence stocks and broaden to other stocks in the marketplace. And we're starting to see that the last few months. Last year was a good lesson. The market was up 40% from Liberation Day in April. Liberation Day scared a lot of people out of the market. We had a couple of clients get scared out of the market. Our counsel was to stay the course, and they didn't, and it hurt them. But the key is always make sure your portfolio is aligned in terms of goals, time frame, and risk tolerance. If you have any questions, feel free to call us. We'd love to hear from you. In the meantime, enjoy the rest of your winter and stay in touch. Thank you.